Welcome everyone to our Arab Federation of Exchanges Ask Me Anything session as part of the FinTech Hackathon with FinTech Galaxy. So I'm pleased to moderate this lovely Ask Me Anything session with amazing friends. Again, this is a closed session. Hopefully, if you need any more details, we can extend on that in a bit. I'd like to ask every of you attendees to please mute yourself. We will be. I would like to think of myself as a democratic person, allowing you to mute yourself before anyone from the co-hosts actually does that on your behalf. And we will have a specific section towards the end with questions from the audience. But today, allow me to welcome three amazing speakers to join me on the panel. I'll start with Mohamed Farid, who is the Executive Chairman at the Egyptian Exchange and President of the Arab Federation of Exchanges. Welcome, Mohamed.
Hello, Rami.
Hello, Mohamed. And I would like to also welcome Rami El-Dokany, Secretary General at the Arab Federation of Exchanges, AFE. Ahlan, Rami.
Ahlan, Rami.
Cheers. And third, last but not least, Namir Khan, who is the Chairman and Founding Board Member of the MENA FinTech Association. Hi, Namir.
Thank you, Rami. Thank you for the introduction.
So before we start, I would like just to give you, the three of you, the floor for just a couple of minutes, just a quick intro on your organizations, yourselves, and what have you, just as an introduction of your kind selves to the audience, and then we will kick it off with the first part of this Ask Me Anything session. So please, Mohamed Farid, just half a minute, background, what you do, and just a quick intro.
So could you come again, Rami? What do you want me to say about myself?
Just 30 seconds background about yourself. Just introduce yourself beyond the name and title I mentioned.
All right. So basically, I'm Mohamed Farid. I have around 20 years of experience between the public sector and the private sector when it comes to financial services and when it comes to policy setting and economic policy reform agendas that have been implemented in Egypt. I started my career at the Ministry of Economy, followed by the Ministry of Investment for a number of years. And then I was the Vice Chairman of the Exchange during the revolution period. And then I moved to the private sector and developed the currently well-known consulting firm in the area of economics and finance and economic advocacy or economic policy advocacy. And then I moved back to the public sector as the executive chairman. In terms of education, I span between business, economics, quantitative finance, and a PhD in capital markets. So this is in a nutshell, basically.
Thanks, Mohamed. Rami, please, go ahead. Quick background.
I'm the Secretary General of the Arab Federation of Exchanges. I've been in this position for almost the last year. I was elected by the GA in 2019 in our GA in Cairo. Last year, it was a pleasant surprise. I bring in almost 17 years of experience in investment banking, private equity, corporate finance, and stock market, definitely. I worked in many areas. I jumped the corporate career like 2 years or 3 years back. And I started like a boutique venture capital out of Cairo. We partnered with a mega accelerator globally, and we started a promising fintech accelerator in Cairo. We invested almost in 11 startups that year. So when I moved back to the official post in AFE, we found ourselves a little bit lagging behind in terms of technology and innovation. So we put fintech on our priority list. that's why we partner together with a fantastic team of Fintech Galaxy and Mirna Sliman in order to have this Fintech hackathon and take it forward.
Lovely. Namir?
Thank you very much. So Namir Khan, working and leading the MENA FinTech Association along with other members. A little about me in the background. I've been working in the financial services industry for the past 7 years, and I was an outside-in addition to the industry. Previously, I was in logistics. When I entered financial services, I was heading strategy for a large financial services institution here in the region. Apart from that, been very well engaged in the insurance business as well. At the same time, used to lead one of the largest portfolios in the region for bank assurance and wealth management as well. And now pretty much working in close collaboration with the regulators, at the same time with different fintechs as well, for market scale up, at the same time go to markets, and most importantly working in close collaboration with partners like Fintech Galaxy as well, to ensure that we have a robust fintech ecosystem that is creating a conducive environment for the larger fintechs of the region.
Lovely. So I'll introduce myself as well. I'm Rami Al-Karmi, and I'm a Chief Innovation Officer with Jordan Ahli Bank, based here out of Amman. And I'm also the CEO of Ahli Fintech, a company I co-founded with the bank, a fully owned bank accelerator and venture studio, basically an extension of the fintech space out of the bank. And I'm also a member of the advisory board of Fintech Galaxy, a proud member of the advisory board of Fintech Galaxy. So today, our topic is the AFE Fintech Hackathon. And the plan I have in mind is that we zoom in on the three main pillars. One is the general concept. Why are we doing this? And I would like to hear more from you guys on the panel on, we'll talk about this now in details, but I mean eKYC, the stock market, what is the value of having an actual unified ID for investors that is pan-Arab maybe, and we'll look into some best practices globally and what have you. The second part, I will zoom in with you, Rami and Mohamed, a bit more on the specifics of the hackathon. What are you expecting, and some of the judging criteria, the awards, and why are we doing this, and what have you. And towards the end, we will keep some time for the audience with any specific questions that are beyond the discussion that we had. So I hope this covers that's the plan basically. So let's kick it in. So let's start with the first part, the general concept. And before we dig in with the AFE part of the group, let's hear a bit from Namir on eKYC in general in financial systems. What's happening? Challenges? Where do you see what's going on?
So Rami, thank you very much for sharing the stage with me. So there's a lot that's currently happening when it comes to eKYC in the region. It is a subject that is being studied a lot by multiple regulators across the region. And till date, at this point of time, we have one of the only countries that has gone live when it comes to eKYC completely. But at the same time, we have different other countries as well who are now evaluating and progressing on how to move towards an established eKYC program. Similarly, same goes for Egypt as well right now, if we're specifically talking about Egypt at the moment, right? So, I mean, Egypt is, so in eKYC, you typically have like two different approaches. You have eKYC and then you have the CDD, the tiered approach. At the moment, let's say Egypt is following the CDD approach, the tiered approach, but now they're exploring eKYC. So the larger economies, in the Arab world are currently focusing a lot on the eKYC mechanism, which is quite promising for all of us in the region. And apart from that, if I was to say that, why is it important? I believe that, for any fintech ecosystem to be growing robustly and to be, having an accelerated growth, the most important thing is to ensure that we are having access to data, right? And data that can actually uniquely identify who that specific person is, what risk that he basically possess right now. And for that, we need to have the underlying foundational framework, which is of having a strong national ID system that can then enable us to have a strong KYC that we can conduct on a specific person. Now, typically, the challenges I would say that we are currently facing in the region when it comes to eKYC, some of them would be like, for example, absence of legal certainty. So, I mean, we do have a lot of countries who want to basically jump on it, but at the same time, I mean, there is, we lack harmonization. At the same time, we do lack integration of various identity databases, which is typically required for a national ID system that can once again create a very strong foundation for a KYC to happen. So a digital ID system needs to be collaborating and speaking to different departments within the state itself to be able to acquire the right level of information. Therefore, it is critical to have clear legal frameworks at the same time when you're basically going to be executing it. So that's one of the challenges that I personally see. Secondly, the second challenge I would say is the lack of internal technological and compliance capabilities that we would have. So that would be like challenges that would include insufficient compliance expertise that any specific nation would hold or any specific country would hold at the same time if they are technologically constrained. Uh, some of the countries that holds them for jumping towards a KYC right away is security as well. So as we are now exposed to more data, we do understand that privacy, data protection, all of that is a concern. So that holds a lot of countries back as well to basically implement eKYC instantly. Uh, some countries and some of the regulators have limited budgets as well. So that also is a major hurdle that we see in an eKYC program to be implemented. But remember this, that they do understand the utility of eKYC, which is important. But I'm just sharing you some of the challenges. At the same time, I mean, once you are basically going to be implementing eKYC programs, the important thing is to also have, I would say, access to high quality data. That is also something that some of the countries will have, some of the countries will not have. So primarily, if I was to look into the challenges, I mean, that's what I would see. And in terms of coordination as well, so a lot of regulators, a lot of countries do have issues in terms of coordination. That again leads to a lot of issues. And most importantly, if we're talking about regional standardization, that is something very critical itself, very important to ensure that the region thrives and the region is basically self-sufficient and self-sustainable rather than relying on other international countries to be a part of. So typically, if I was to say some of the challenges when we're looking into eKYC implementation across the region, these are some of the core issues that have been highlighted by the regulators themselves with various conversations. So once again, it's a very important utility that would enable us to serve. Once again, if we have a strong eKYC program implemented, that is going to enable us to then serve even investors who are typically smaller ticket size investors as well, because once again, then once you have access to data, you're able to do a lot of CDs appropriately, you're able to save costs, you're able to save time, and then once again offer cheaper services.
Thanks, Nair. Mohamed, I will move to you now, and I would like to hear more some of your insights on eKYC, what's the relationship with stock markets, the importance of having this unified ID for investors, if any. Just help us shed some light on why would we need that?
Okay, the starting point for the need of an electronic something before naming it KYC would be the lack of distribution capabilities and capacities of investment banks and brokerage companies, bottom line. So if you can bear with me 1 second, sorry.
No worries. Maybe Rami, you can.
Apologies. No, I'm back.
No.
Apologies. So So basically, so the lack of distributional capabilities and capacities that is not relying on technology is hindering the development of capital markets. When you get to see the participation ratio of the youth and youngsters in capital markets, it is dwindling basically, or it is declining by the day. So basically, you need to find a methodology that is quite simple and easy to enable entities to get on board new investors, irrespective of the type of investors. This is a dual problem. It's not only a problem associated with the KYC requirements, the generic requirements that we have, but as well the lack of productization of capital markets in globally, actually. But globally, they started to try to find solutions for that issue. But at least in the region and in the Arab market, the lack of productization of the different capital markets venues available to them. So that is the need, let's put it that way. So the market need is associated with the lack of presence, and definitely this presence would increase by youngsters and the youth should we have an easy methodology for them to participate. The second aspect, it's not a KYC in its strictest forms, or in its strict forms. It is e-identification, let's put it that way, because the KYC per se, you would need by far more information than what can be availed and provided by the identification, electronic identification availed to the different people. So that is an important aspect to be taken into consideration, that any e-identification has to be complemented with further information, at least in its initial stages, to have a complete KYC associated with the risk return profile of the investor, the availability of funds for them, and so on and so forth. Otherwise, it would be an incomplete process in all cases. So to identify that this is the investor is something, but to complete it with further information associated with their incomes, associated with the risk return profiling, and so on and so forth, this is the KYC that would be required by asset managers and brokerage companies. But at least the starting point is to have this electronic identification as a starting point. In order to do that, we need two aspects, as mentioned by Namir. The first one would be a conducive regulatory framework that enables and accepts e-identifications and e-KYCs in that regard. But the problem with the regulatory frameworks is that you're talking about a regulatory space that goes beyond capital markets, that would have cybersecurity requirements, that would have IT requirements, and hence creating a conducive regulatory framework would not only rely on a single entity such as stock exchanges or market organizers like exchanges, or market regulators like the SEC and the like, more or less, and ESCA in the UAE, and so on and so forth. So basically, it is finding the appropriate regulatory space and to focus on that regard. Once you have both in internal markets, you need to go to the third level of having an acceptance between different regulators and market organizers, that the regulatory space is conducive, the regulatory framework is present that enables those entities that would want to do the EK identification. And the third aspect would be for the different regulators and markets to accept the e-identification to start, first of all, within borders. So it doesn't have to be capital markets only. It can be issues pertinent to microfinance, for example. If you have a person that have been e-identified as a microfinance borrower, then there shouldn't be any further requirements, hypothetically speaking, at least, for them to be e-identified in capital markets. So within the border, that's within the borders, but across different industries, the e-identification should be working. And the second step, to have it on a nation-based, to be cross-borders acceptance of this e-identification. So that is, in a nutshell, what is required.
Excellent. Rami, what do you think?
I look, when I talk about digital KYC, I look into many areas of the business. As Dr. Farid just said, that we're basically running out of customers. The average age of investors in stock markets, it's increasing by far. I would assume that the average age is 50 years plus if we consider all the in the Arab world. So we're running out of customers, basically. So the new generations, the average or the bracket age of 20s to 30s, that do not have accounts in capital market, they do not trade into capital markets, there is resistance from their side to come in this play. Not because they do not like capital markets, they do not understand capital markets, but as long as we do not make it as simple as subscribing to a Netflix account or a Deezer account, you will not have appetite for these generations to come on board. So the first spectrum, or the first determinant why we're doing this, is basically we are running out of customers, and we see this problem happening in 2 years. So bringing in more customers to capital markets means bringing in more money, even if the per capita portfolio is way smaller than the existing average. But with the mass coming on board, you will have more liquidity in the market, more ability to trade on several stocks. This is number one. Number two, let's talk why do we need, or what is the function actually of a KYC, and why our financial institutions are very rigid and very strict when it comes to KYC. It's basically related to AML concerns, that you have illegal money and you want to trade this money into legal businesses, and then you're going to launder this these funds. So this is the primarily concern of any regulator when it comes to KYC. So if you look into the experience of commercial banks and central banks, what they did into this area, for example, in Egypt, for example, when they're considering digital KYC, they've come up with the idea of light KYC for specific portfolios with certain limits of the account, an account that does not exceed transactions exceeding a value of X, for example. This would be allowed to process through a light KYC or an electronic KYC. If we want to apply the same idea, why don't we come with an idea, okay, so portfolios below than $1,000 can be opened by digital KYC, and any transactions above this amount, it has to go into the rigid traditional KYC that you have to go in person, meet the broker and stuff like that. Because at bigger amount portfolios, usually the brokers will do the effort and they will send you their employees to open the bank accounts, not vice versa. So this is number two. Number three, and what I'm seeing, and also Dr. Farid shed some light on it, is sharing KYC between different financial institutions. And that is always the debate that we are talking about. If you are already KYC'd in a bank, and banks are much more rigid and much more ridiculous in their process than any other financial institution. But if you are already KYC'd in a commercial bank, why don't we share this KYC among all financial institutions operating in the same country? That would include stock markets, microfinance, insurance, leasing customer, but leasing is for corporates, or any institution working with individuals that could be KYC. So the sharing of KYC becomes a much more important aspect. I'll give you like a funny situation. In the UAE, you know, there's 5 regulated exchanges as we speak, right? If you want to trade on each exchange, you need to be differently and separately coded on each exchange. So a certain investor could have in a single country around 5 IDs in order to trade on each exchange. So if you open the limits by blockchain technologies and sharing the KYC, and by simply saying that the customer or the investor actually owns their ID, it's going to be a game changer for everything. So this is what we're trying to push to do, which we want to happen. We want to see these solutions happen and go back to the regulators and tell them, you know what, it's doable, it's solvable. Let's talk about different regulations. Let's ease the regulations into smaller portfolios and let's give it a try. I know it's not like a one-day solution. The central bank in Egypt, for example, have been doing it for the last 2 years. I worked closely with them. I even brought in my previous position, I brought in one startup from India into their sandbox to work on digital KYC. So I know what's happening in the background. And it's taking them time, and they have the right to take this time, because it's not an easy decision to divert from this to that in a nutshell. But if the central bank is already doing that, why can't we debate, and with other regulators that's regulating the non-banking financial businesses, why can't we do that and share the KYC? That's what I think of.
Excellent. Okay. So we have two models, and I just want to shed some light on what's going on also on a global perspective. There are some eKYC solutions that are based on a federated model, so sharing KYC. So I go into a first financial institution, I do my KYC, and I get my profile. The minute I go to the second financial institution one shares my data with financial institution two, and that's currently available today in UAE with the solution done by at the Hive with the Mashraq Bank and a few other banks. And in Jordan, we launched the second model, which is the central repository of an eKYC. So I establish an account, which is the Anamin profile platform. I establish my KYC record. It gets verified, and as Rami mentioned, we have it on a immutable on a blockchain record. And then any institution subscribed to this platform has access to my KYC record, provided I provide consent. Those are the two worlds of how you can operate an eKYC model. And now with the AFE's requirement, because I want to move into a bit more into specifics on the hackathon. I'm sure you might, I would like to hear a bit more, but I'm sure you're open to both models. There are pros and cons operationally with both options. But again, I liked, Rami, your point now today, if we can consider the hardest KYC part or the most comprehensive is the banking KYC. And the minute I have a verified KYC account that is acceptable in a bank, then I can take this across the board everywhere, across all financial institutions, even beyond financial. You can use this with the telecoms, so there are many KYC-centric relationships between customers and the institutions. So I like this, and I'm happy that AFE is thinking of this as a major enabler, a pan-Arab major enabler or infrastructure component that would allow exponential growth for organizations and what have you. So a microfinance institution can use this, an insurance company can use this, and they can all build on top of this KYC layer that will be created based basically data and what have you. So I would like to have a bit more, help me zoom in a bit more, both Dr. Farid and Rami, a bit more on the specifics of the hackathon. So what are your expectations out of the hackathon? So we have some attendees who are planning to pitch during the hackathon. So what are you expecting? What is your jaw-dropping experience that you would like to see out of this hackathon?
Basically, I would hope to see a system that of identification, because again, I'm reiterating, it's not a full KYC at the end. Financial entities at a point of time would require to have, if we're talking about significant amounts, they would need to have their own, I would say, KYC regarding the large figures. So that is something that I believe not a single, unless it has been already KYC'd by one of the banks, as Mr. Rami mentioned. So bottom line, what I would be hoping to see is a system that takes into consideration, I would say, the ease of and process of identifying the individual investors from the one hand, and to be able to have or flexible enough to have the backdrops that would enable the different entities to impose their own, I would say, requirements. Because at the end, you can be having a bank or a brokerage company that would require some sort of manual intervention at a point of time. I don't know what type of manual intervention, but this could be something required. So basically that the system would be allowing for a certain, I would say, manual interventions, eKYCs, in all cases, the onboarding of different investors, even with international brokers, there would still be a human interference at the end. Maybe the onboarding in terms of documentation doesn't have to be signed in front of that person, But when you look at all brokers internationally, apart from very few that do not require a physical human interference and interaction between them and the broker at a point of time. So a flexible system that is taking into consideration the possibility of having these entities KYC'd. I know that is a quantum leap, so it doesn't have to cover this leap, but at least the point of a proper identification with the required security and cyber security and GDPR process of protecting the information, because this would be a requirement to rely upon in the future, and how to link these with the different entities that can be working in the market between banks, brokerage companies, insurance companies, as you mentioned, because the ultimate benefit is quite high when it comes to that point of identification. The second aspect, but this is not to be pitched for, it requires the regulatory frameworks to change and work around it, would be to have a differentiation between the $1,000, which would be the 15,000 Egyptian pounds or 10,000 Egyptian pounds or whatever, that would, as long as you're dealing with these figures in the banking, in the insurance, or in the capital markets, this light e-identification should be sufficient. If you want to act more in terms of finances, then probably a detailed one. My expectations would be to view different views, and definitely if one platform can cater for the differences of the e-identification and e-KYC requirements across markets, that would even add more. It would even add more to the jaw-dropping aspect that you mentioned. Excellent.
I love that. So the tiered approach as well on the type of KYC related to the amount and what have you. Rami, do you have any points to add on expectations from the hackathon?
Yeah, definitely. I want everyone applying to the hackathon to think that the customer is still the same person. So the guy who actually, the customer who actually goes to the bank is the one who we want him to trade in the stock market. We want him to apply for an insurance policy. So the person is still the same. So let's always put this in the back of our minds, and let's think of a customer-centric approach. What's going to make it easy for a customer to open an account, and make it sexy for the younger generations and make it appealing, because everyone, when you tell them let's trade in the stock market, they always think of their fathers, not of themselves. They think that is something is very advanced. While if you go to the US and Europe, you'll find the younger generations are the one who are actually driving the trading activities, and they're putting some money into that, whether they're directly doing it or through different products like ETFs and different funds that trade on their behalf. But the contribution of the younger generations should be there. I want always to think that if you are a customer of the bank, why don't you cross-sell the product? If you have a wallet or an e-wallet with one of the banks, why don't you put the feature of trading on stock market directly from your account as part of the process? So if we're looking into the solution, yes, I want to look into KYC specifically, but I would love to see the add-ons that we want to proceed, because financial services, at the end of the day, the customer is the same person. So you do not want the person to go to 3, 4 different organizations in order to create his own ID and to allow him to do that. At this days, we will not. No one is going to do that for you. You have to do it yourself. So sharing KYC is one area that to focus on. The user experience and how appealing, how sexy, how easy is it to open the account. The third point is, you tell us, once you tell us the solution and we see that it's really appealing, we will go study what are the regulations that will hinder this solution. And we start talking with the regulators, how can we easing up some of the regulations, like Dr. Farid says, and just suggested, let's steer it into specific amounts. And the smaller amounts wouldn't require a full KYC product that you have to be there in person and all this stuff. But actually one interesting point, and I want Dr. Farid to correct me if I'm wrong, that I think in the stock market regulation that above a certain figure of the portfolio, the investor needs to have a bank account and has to trade through this bank account with the broker. Right, Dr. Farid, or not?
It doesn't have to be a bank account up to £100,000. They can act with an account with a broker company. More than 100,000 pounds, Egyptian pounds, they have to have a bank account.
Perfect. So we're talking about around $5,000, $6,000 limit that you have to be KYC'd with the bank, one way or another. So that's what
you have to have a bank account, yes.
Exactly. So you will be already, if you're trading above 100,000 pounds, you have to be KYC'd with a financial institution. So that would be the starting point, if I may.
Excellent.
Yeah, sure. Good. But the point is that the KYC, and that would be the counter argument, that the KYC for opening bank accounts is very different than KYC associated with risk profiling and return profiling and age profiling with stock market investors. So you can be KYC'd, yes, with a bank. However, the bank would not get the info associated with your risk tolerance, how much is it? So accordingly, you get to be able to advise at least or to see your client how maybe it's not from a brokerage company, from an asset management perspective, but even a brokerage company, one of the requirements is to is to KYC the client based on the risk profiles and that point. So yeah.
So it's a simple questions to the investor, right? You don't need to be present when you ask this question to the investor. And you can do it digitally. You can.
It varies definitely from one entity to another, depending on the sophistication associated with the brokerage company or the asset management firm and the investor as well. So so hypothetically speaking, if you can do an e-identification, then hypothetically speaking, you can be doing a full-fledged e-KYC with the associated and supporting documents for the income and so on and so forth. Hypothetically speaking, yes.
Fantastic, because all the supporting documents usually are also asked by the bank, and income proof and any assets you own, other deposits. And basically the banks will know better than the brokerage companies in this area, because they have the iScore, they can see all your accounts in different banks. So they can actually advise brokerage companies.
Hypothetically speaking, yes.
Exactly. Fantastic. So Rami, this is what I think. I mean, this would be the jaw-dropping areas that we need.
Excellent. I just want to follow up with Dr. Farid. Are there any plans with this in terms of implementing anything with the Egyptian exchange? Do you have any plans if any of the ideas sound interesting?
Well, our plans coincides basically what the other regulators basically are doing, the Central Bank and the Financial Regulatory Authority of Egypt. Because at the end it has to be a concerted action. We, as an entity, will not be capable of working alone in that regard, given the regulatory sphere that needs to be covered.
Okay.
So we're supporting I would say the startups in this area that have already been earmarked by the Central Bank of Egypt to be sandboxed, and their ideas to be within the sandbox of ideas to be tested within the central bank on the e-identification and e-KYC. And that all stems from the concept of more financial literacy and the financial inclusion, investment inclusion, and so on and so forth. So we're working with them in that regard. And it has to be taken on a step-by-step basis, basically.
Lovely. Okay.
Okay. So yeah.
Sorry.
Rami, I have one point to add over here. I think I was just, I mean,
I wanted
Rami
to give you the floor.
Struck the point very rightly. Within our region, we have this element of trust with the banks, right? So, I mean, when you're giving your money, you're always going to be, majority of the times, you'll be trusting the bank. A lot of times this happens, right? Now,
not in Lebanon, eh? Not in Lebanon. I have to put this.
Not anymore. Not anymore. So, well, the thing is that the banks already have a very strong ecosystem of consumers with them. At the same time, as mentioned rightly by Rami and Dr. Farid as well, that the amount of data that you typically possess as a bank is significant and humongous. I think it's more about plugging in, because I haven't seen many of the banks offering such a solution on a micro investment level, where we are basically easing the onboarding, because you have already onboarded the customer. If we are basically doing additional KYC for a customer base for capital markets, that can add on questions to your existing KYC and existing data and existing risk assessment that you already have as a bank, right? So I believe that having solutions further, I mean, or maybe having an add-on KYC, because you've already done almost 60 to 70% of the KYC as a bank, adding on a few more plugins, let's say in terms of KYC, when you're offering such a solution or such a platform to the customers as a banking ecosystem. I'm just talking on behalf of the banks right now, not an independent investment platform. I believe it's the same integration that we have usually had when insurance companies partner with the banks. You have a broker that is partnered at the back. At the same time, you have a bank fronting it, and then you are basically offering the same solution on your own platform. I believe such a thing will certainly, if there is a platform, a digital bank can offer, if there is a platform, an upcoming challenge a bank can offer, I believe this will certainly make a difference in the uptake and onboarding of customers with a lower investment ticket.
Lovely. Before we open up the questions to the audience, Rami, can you help us zoom in a bit on the judging criteria? You mentioned a few, but just take a quick run through on the judging criteria and the winners, awards, and what have you.
The judging criteria would be very simple for us. It's basically we're going to look into how user-friendly is the solution. On onboarding and processing the data, the speed. We'll look into the security aspects. Where do you store the data? If the solution itself will store the data or not? Is it a cloud-based or a server-based? And all that solutions. Then we're going to talk about if it's already operating up and running in different countries, even with other different financial institutions, and not necessarily to be working with stock exchanges on that solution. If you applied your solution with banks or insurance companies, what is your background on that? How many customers have you processed and how many customers have you onboarded? All that stuff will be taken into criteria. And how we look on, also Dr. Farid, I think, will support me this, how applicable is it in our part of the world? Because we want to look into the low-hanging fruits. I don't want to look into a rocket science solution that would fantastically be a beautiful solution, but we would like to look into things that can actually be applied in the short run in our part of the world.
Lovely. So the second part is the awards and what's in it for us as teams joining the hackathon.
What's in it for us? That there is no financial awards or returns in this hackathon, but we're looking forward to work with the winner on specific, to choose together specific markets and specific regulators to start to push together their solution for application and for commercial execution.
Lovely. Okay. So this is the part where we open the questions up for the audience. I will start with Rob Leslie. You sent us a question on the chat. So Melissa, if you can help me. Unmuted. Okay, go ahead, Rob. The floor is yours.
Thank you. So I had one question for the panel. And I think it was you, Rami, who had mentioned that there were two approaches. One was the centralized approach where you're aggregating all the information into one repository in Jordan, and then a sort of decentralized blockchain approach in other places. There's another one which is also decentralized but doesn't rely on blockchain, but instead relies on verification with an authoritative source every time a claimed identity is used, so that you're always relying on information that's coming directly from an authoritative source, like the government identity agency or a passport office or some other highly authoritative source, so that the information is always accurate as of the date that it is presented, rather than relying on historic information that may have been presented at a moment in time in the past. So my question was, is this is this method acceptable? Because it's slightly different to the two that were described, or not?
I'll leave that to the panel, Rami or Dr. Farid, who would like to step in.
Yeah. Personally, I would say that whatever technology you will rely on, will definitely look into it. So we're not assessing the technology part yet at this stage, but we're rather looking into the commercial aspect and the ease of it, and that would have the bigger weight. I don't know if Dr. Farid has a different point.
Well, in terms of the architecture, I believe that's too early of a question to be asked, honestly speaking. I mean, the architecture itself of the database, whether you're talking about something centralized or a distributed ledger, like the concept of the blockchain and how to use it, I don't think at this point of time we will be talking about the DLTs or distributed ledgers, given that it is not yet widely used across entities. So each entity would have its own centralized system of KYC that would communicate with other entities' centralized system of KYCs. Probably you would need at the minimum to create a centralized system at entities. So for example, in the exchange, in the Egyptian context, we have a unified code for investor that is identified. But this is not a KYC, it's an identification. So every single investor would have a single number that he can be trading across the different equities listed on the exchange. Having said that, this does not mean that the individual brokerage companies do not do their own homework related to the client and every single aspect associated with him. I don't see that you will be having. Maybe you can be having a cross communication between the systems that we have and the systems that the central banks can be having, or insurance companies and so on and so forth, to create this collaboration. But to create a single system now would require coordination that is beyond, I would say, the hackathon.
Okay, understood. Thank you.
Perfect. Thanks, Rob. If you can raise your hand if you have any questions, or type in on the chat, so we can give you the floor for questions, if any. If not, then we're all good.
Perfect.
Super.
Okay, 3, 2, 1. We're all good.
Thank you.
Okay. Thanks, guys. Thanks, Dr. Farid. Thanks, Rami. And thanks, Namir. This is an amazing session. And a quick reminder for everyone, hackathon, apply, make sure you're there. And the amazing team at FinTech Galaxy is looking forward, along with AFE, we're looking forward for your applications. And please, again, also spread the word with other teams if interested to join. Thanks, everyone.
Thank you.